Tiffany Arielle here, and I've decided I'm going to start doing a little thing called Spreadsheet Sunday. So I mentioned in one of my other videos that I have spreadsheets like for everything. So I was like, you know what? I can actually come on here and share some of my spreadsheets with you guys. So I'm not going to be doing this every Sunday. So please don't think that Spreadsheet Sunday means every Sunday. But I think I will share them on Sunday because that just sounds cool, like Spreadsheet Sunday. I don't know. Maybe that's just me. But today we are going to be talking about taxes. Now, everybody hates tax season. Taxes were just due not too long ago, and maybe you got a huge refund and you're like, hey, refund. But the thing is, did you know that if you got a huge refund, that actually just means you were giving an interest-free loan to the government all year long? All year long. So you could have had that money in all your paychecks throughout the year as opposed to waiting until tax time and getting all of it back. Or maybe you owed money and you're like, I owe again. How do I not owe? Blah, 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 blah. One thing that really helps me is actually estimating my taxes myself throughout the year. That way I can make sure that my job is withholding enough taxes and I don't have these issues of getting huge refunds or owing huge amounts of money. Now, with that being said, this is literally an estimation. It is not exact. Taxes are kind of complicated. I cannot possibly make a spreadsheet that accounts for every possible tax scenario. And not only that, I'm not a tax professional. I don't know every possible tax scenario. All I know is what works for me. So I'm sharing with you guys what works for me. If it helps you, then great. If not, please, then, figure out something that does. So let me go ahead and start sharing my screen. But while I'm getting that up, I did want to mention that this that I'm sharing with you guys is only going to be working for federal taxes. It is not going to help you with state taxes, mainly because everybody lives in different states and I don't have time to be trying to make a spreadsheet for every single state because that's way too many options. And not only that, but I don't even live in a state with state tax. So my current version doesn't even have that. Okay. So here's my spreadsheet. So I'm showing you the Google Sheets version. I also will have an Excel version available. It'll be linked down below. If you decide you want to download this, it'll just be like $1 depending on, for each version. So first things first, this is the instructions tab. So there's different calculations depending on whether you're single, whether you're married filing jointly, whether you're the head of household, or whether you're married filing separately. And then just some other notes, like if there's any cell that is green, you want to make sure that that cell is filled in. If there's any cells that are yellow, you only want to fill those in under very specific circumstances, which I will mention in this video. And do not change any red cells except on the forms page, which I will show you later. So this is the main page that everything kind of takes place. So the first thing you have to do is fill in your filing status. Here I wrote married filing jointly. I don't know why I wrote that. I'm actually going to change that to single because that's what I am. So I just put S for single. I don't have any dependents. And so that's pretty much it. Although I don't even think this is even calculated properly for dependents right now. So I wouldn't rely on that, to be completely honest. So then I have two columns basically for taxable income and for withholding. Now this you're going to get from your pay stub. So what I do is I have one row basically for every time I get paid. So if I get paid twice a month, I have January 15th, January 31st, February 15th, February 28th. If you get paid every 2 weeks, you'll have more paychecks. You can just add a couple more rows. I have bonus 1 and bonus 2 if you get bonuses or commissions, or maybe you have 2 jobs, you can add separate rows for each job. Whatever your situation is, you can add however many rows you want to add. There's not a restriction. Now, I will say this. I would definitely recommend adding rows in the middle like this, because if you look at this total column, this is going to only row 30. So if I add rows in the middle, So if I add rows in the middle like this, right? Now I have 34 rows. I look at my total column and you can still see that it's getting all of the rows. So that's good. But if I were to just add rows at the end like this, then in that case, like my total column is still only going to 30, I'm sorry. So if I want to include these other rows, I can just change this to like 7, and now it's going to give me all my rows. So that's the one scenario that I would say changing the yellow cells. Basically, if you add more rows, you may have to change it because of that. But outside of that, you really shouldn't have to touch these. These are both the same. So these are red cells, these are calculations. So the standard deduction is calculated depending on your filing status. Your actual deduction is calculated depending on A, your filing status, and B, like what itemized deductions you may mention. And then basically this is your total taxable income, which is basically adding up everything up here and then subtracting your deduction. This is how much tax you owe based on, you know, the tax brackets and everything like that. This is capital gains tax, which I'll talk a little bit more about later. And then this is the total tax that you have to pay. And then if you have any tax credits, you can put them here. I'm not super familiar with tax credits, so I just left it like that. And then this is how much refund you would be getting, right? So in this case, we're getting about an $85 refund. So that's pretty good. That means we did not give the government an interest-free loan. And we also are not, you know, owing a large amount of money either. So the main part of this is just making sure that all of your pay is kind of mentioned here in these different rows. Now we move on to capital gains. If you do not know what capital gains are, basically that's what you pay if you have investments that you sell. So that could be stock, it could be a house, it could be things like that. Now, there are different scenarios which you have to pay capital gains tax and not pay capital gains tax. So like if you have a house, there's like, if you live in the house for so many years and blah, 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 blah. I'm not here to tell you whether you need to pay capital gains tax or not. If you don't know what applies to you, then I would suggest either consulting with a tax professional or doing your own research by like Googling and things like that. So basically I have two different tabs. Both of these are pretty much the same. The only difference is long-term capital gains versus short-term capital gains. So pretty much the difference is like if I buy a stock today, which is April 3rd, and I sell the stock in, I don't know, let's say January, then at that point, it will not have been a full year. And so in that case, any capital gains that I earn would be short-term capital gains. But if I buy the stock today and then I sell it in August of next year, then it'll have been over a year. And so in that case, it would be long-term capital gains. So the reason why this is important, I'll show later when we look at the tax brackets, but basically long-term capital gains, like the percent of tax you have to pay is like way lower. So it's actually really good to have something like this to kind of decide like, hey, like, should I actually hold on to this stock longer or, you know, sell it now? So you can kind of see like what your tax difference would be. But it really depends on what your tax bracket is. But yeah, I don't know. I just like numbers. I like to run the numbers for everything. So the way that the spreadsheet works is in the first column, you have date. This isn't really used for anything. I just like to keep track of dates because it's cool. Here you have like however many shares you are selling. This is how much you paid for the stock. This is an adjusted price. Now, if you just like bought stock from Robinhood or something like that, you're probably not going to have this adjusted price. But if you're like me and you work at a job that either gives you stock as part of your compensation, then in that case, your price paid would be 0 because they gave it to you. You didn't buy it, right? But the thing is that when it vests, like when it's yours, they actually withhold taxes already when it vests. So you don't have to pay capital gains tax on that. So let's say they gave me a stock and the stock was worth $41 when it vested. So they would have already taken the taxes out on those $41. So I don't have to pay capital gains tax again, right? So in that case, I put adjusted price as $41 because they already took out my taxes. And so then at that point, I'm only paying taxes on like whatever I earned after that. This capital gains and like adjusted price is kind of complicated. So if anybody is interested in basically taxes for RSUs or stock purchase plans, like comment down below. I can make a separate video on that. I spent a lot of time researching it a few years ago because I was confused and didn't know what to do. But basically, you don't want to be paying double taxes. Nobody wants to pay double taxes. So make sure that you figure out your correct adjusted price if it applies to you. Usually, it would be on your like transaction summary that you get from your brokerage, whatever you're using. So it might say adjusted price, it might say like cost basis adjustment or something along those lines. This number is basically from there. So yes, you have your price that you actually paid, you have your adjusted price, which only applies in certain scenarios, and then you have the price that you sold it for. And then if you have any fees, like you can mention those here too. This isn't super important because it's not really, probably not going to be that much to actually adjust your taxes that much. So then we have the gross profit, right? So in this case, we sold 10 shares for $120. So we grossed $1,200. That's how much would basically come to the bank account. But you're like, wait a minute, I have a cost. I still had to pay $100 for all those 10 shares. So that's already $1,000. And then I had to pay another $10 in fees on top of that. So that's actually $1,010. So my profit is actually only $190. So only what's in this column is what you actually pay tax on. You don't pay tax on this, only this. So then over here, it's just adding everything up and the total is down there. We'll talk about that later. This is basically the same thing that I just kind of was telling you. This is saying, please check with the brokerage whether your sale is long-term or short-term and make sure that you fill in the info in the correct place. You could also check with your brokerage about these whole price versus adjusted price and all that good stuff. Short-term, I'm not going to go over. It's literally the exact same thing. This brackets fed, you don't actually need to touch this. This is just for calculation purposes. This is already filled in for 2021. So all the income that you earn this year, 2021, is using these percentages. 2022, these numbers are going to be different. You can update them yourself if you want to continue using this, or I'll probably have an updated version available. And then I have standard deduction and we have long-term capital gains. That's the reason why I wanted to come here, because if you look at this, long-term capital gains is either 0%, 15%, or 20%. This right here, this is how rich people make money. Like seriously, this is how rich people make money. So if I make, I don't know, let's say if I only make $30,000 a year, right? If I only make $30,000 a year and I'm a single person, I don't have to pay any long-term capital gains. So if I make $30,000 a year in my job and then I make another $5,000 off of stocks, I literally don't have to pay tax on any of that $5,000. Like, is that crazy? Crazy, right? So if I make more than like this $40,000 as a single person, but I make less than $445,000 and whatever, which most people make less than $445,000. Like, let's be real. Very few people make more than this. So basically, I pay 15%. So let's say I make, I don't know, $200,000, right? My regular income at $200,000 would be taxed at like 32%. So if I make already $200,000 in my regular job, and then I make another $20,000 off of stock, I would have to pay 32% tax if that was short-term capital gains. But if I wait for a year and make it long-term, instead of me paying 32%, I only have to pay 15%. That's a huge difference. Like, it's actually crazy. So it's just good to kind of keep this in mind. It's not always better to hold like a stock. I'm not trying to tell you when you should sell or buy stock. Like, I'm not an investment expert. However, like if you're in a position where maybe you've like had a stock for like almost a year, but not quite, you probably might consider holding on to it for another couple weeks or whatever, just to like potentially reduce your taxes. Now, this also depends heavily on what your income is. If you're only making, $40,000, $50,000, then like it's not going to be that big of a difference. But if you're like up here in this like kind of $200,000 range, then like it's a huge, huge difference. Now, if you make more than like this $445,000, then you have to pay 20%, but 20% is even still way less than like 35, 37. Like, yeah, that's crazy. And this is the same thing just for the different filing statuses. I'm not going to go over that right now. So then we have the Deductions tab. So this is where you can mention any kind of like itemized deductions. So let's say I donated to some charity. And let's say I donate every month 12 times a year. So I donate every month and then I donate $50 each time. That means I donated, of course, a total of $600 over the course of the year. Let's say I donated to like Goodwill or something, right? I went on April 1st and I went one time and I donated $300 worth of stuff, and that $300 worth of stuff was 6 dresses. Now, I don't know what 6 dresses would be worth $300, but look, fill in what you fill in. I always like to put a description of what it was, because when you go to actually do your taxes, they will kind of ask you like what things were worth, and they kind of will ask you like what you donated. Oh, was it clothes? Was it household goods? Blah, blah. You know, sometimes they ask these questions, and like you always kind of want to know like what it was. And here I definitely like to put the date, because usually when you go donate items, they'll give you like a receipt, and then you can file those away. And if something happens, you get audited, you can like refer here first, and then you know like, okay, what date of receipt do I need to look for? Other things that are deductible, like mortgage interest, right? Or your student loan interest, etc. So here I just kind of like add, all of, that kind of stuff here. Now, this is not fully accurate, because some of these deductions you can actually still deduct like in very specific circumstances if you do not itemize your deductions. But again, I'm not a tax expert. I'm not trying to cover all the corner cases, just trying to help you get to some general ballpark number so that you don't have like a huge surprise come tax time. We are not trying to reinvent TurboTax. Like, that is not what we are doing. This is just to give us like a general idea of where we're at, so that we know if we need to withhold more money throughout the year or withhold less money throughout the year. So basically you just fill in all your deductions here, and that is pretty much all you need to do. So for your actual taxes, the 4 pages you need to update are this estimation tab with all of your like income. Then if you have capital gains, you put it in either long-term or short-term respectively. You fill in all of your deductions, and that's it. Once you do that, you can basically just go back to the estimation tab, and you can kind of look at these numbers down here to kind of figure out if you need to make any adjustments or if you're happy with where you're at. The last tab is really just, I like to use it so when I'm getting ready to file, so that I know like, okay, am I still waiting on something, or can I go ahead and submit my taxes? Because all the forms don't come at the same time. They kind of trickle in. Some of them come in January, some don't come till mid-February. So I like to keep track. So what I do is I mention the company here in column A. So let's say you work at Target, right? You get your paycheck, they need to give you a W-2, and then I just write no if I don't have the form yet. And obviously if I don't have the form, I could not have possibly filed the form. I didn't enter it into TurboTax. I haven't entered into Credit Karma. I use Credit Karma personally. But alternatively, let's say I have a savings account at Bank of America, right? They have to send me a 1099 int. So I say, oh yes, I already have that form. I got it in the mail, but no, I have not entered it into Credit Karma yet. So that's why it's yellow. Now, if I have some other form, I have it, I filed it, it's going to automatically turn green. So all of this color coding is already built into the template. You don't have to worry about that. Now, there may be situations where you get a tax form, but you don't actually have to file it. So for example, I typically get a form every year that verifies that I have health insurance. I don't even have it logged here, but you may have forms like that kind of come, but on it, it'll just say, oh, for your records, like do not put on tax return, something along those lines. In those cases, like you can still mark yes or no to say that you've received it, but I would write an A under filed. And so that way it turns gray and you know that you don't need to worry about it. So that is pretty much all I wanted to share with you guys today. This is the spreadsheet that I use. Again, I'll have the link down below to where you can download it. You can either download the Excel version or the Google Sheets version. Now, if you decide to download the Google Sheets version, it will look like this. So it'll say view only when you open the link. So what you're going to do in that case is you're going to go to File, and you're going to click make a copy, and then you can name it whatever you want to name it. You can put it in your Google Drive wherever you want to put it. And so then once you have your copy, then at that point you'll be able to edit everything and go on from there. I just made it like this because obviously I don't want people to be able to just like mess up my master version. Yeah. Okay, but that is all I wanted to share today. So don't forget to comment down below if you want to see more Spreadsheet Sundays, if you have a specific type of thing that you feel like it would be good to have a spreadsheet template for, or if you want to kind of deep dive a little bit more into some of the stuff I was talking about here, like maybe with the capital gains, like RSUs and things like that, or if you just have other video ideas that are completely unrelated to this, those are always welcome as well. But in the meantime, don't forget to like, subscribe, and share with all your friends, and I'll see you guys next time. Bye! I kind of want to redo the end again. The spring of April's gone, the leaves have all turned brown, the children are all grown up. Okay.